Just 1 second. Can you hear me? If you can, can you give me a wave, Lisa? Okay. Because for some reason I can't even hear myself. I mean, as in I can't hear it. I can't hear you speak at least. Just 1 second. Lisa, could you say anything? Can you hear me? Yeah. Okay. So I just have a bit of a technical issue here in the sense I can't hear you, but we'll get to that. The fact that you can hear me just allows me to go on. So this is going to be a monologue for a while. If you're going to cut in, do a drastic wave or something, I can see you right there at the corner. So I'm Jeremy. I'm involved in so many things blockchain related. I even got my smart specs on, so I appear more intelligent as I start talking about investments and even how VCs are handling this blockchain space and the spur of DeFi as we go along. I think that what Lisa, Jesse, and even Du has shared has given you a really good insight on DeFi. It needs no further introduction. The fact that you're here means that you are already one of the pioneering batch, right? And the fact that you have hung on up past the 1 hour mark clearly shows your priorities, right? In this space. And I think that is one thing that all of us needs to question, right? Like, why are we really in this space, and what are we looking to be involved in? I think being involved in the technology is one thing, but at the end of the day, crypto has already carved out rather a entire industry, right? And that is what we are currently involved in, whether professionally or even as an investor. So I'm going to keep this entire presentation very brief. I don't have slides. Bear with me here. I'm just going to apply very pragmatic kind of advice from what we are seeing in terms of the fund, right? And before that, CRC Capital, of which I'm part of, is actually a crypto fund, right? Back in 2018, we decided that we're going to be a bit experimental, right? Getting out of the private equity, VC space. We decided that in crypto, there is a possibility of investing potentially in tokens, right, and token projects. And I think that we have taken the experimental step of investing in tokens more than equity, because if you are going to be involved in the crypto space, it makes a lot of sense to understand what these tokens represent, right? Whether it's in terms of the price development or even in terms of governance, right? Which I will get into in a moment, right? Specifically for DeFi. So CRC has done several investments over the years. We started in the whole ICO, IEO space, with pre-sale stuff like that. And of course, right now with this really exciting DeFi movement, particularly in terms of the secondary markets and the attention that the big money has on it, of course, we have gravitated to this space as well. And I think this answers a question a lot of people like to ask, or statement that a lot of people like to make, that wow, this is a great space, this is DeFi. And once the VC money finds this space, it's going to be super bullish. Well, I mean, the fact is the VC money has found this space, right? Institution is smart money. Institution has a huge team of analysts and different people who are have always been plugged into this space. The VCs have never left, right? Despite the bear market of the last 2 years, right? They're still here. And naturally, when there are new opportunities, institution money, family funds, hedge funds, they tend to find their way around it, right? So I think let's get that straightened out first. So definitely, smart money is already in this space. So if you're smart money, then you know what I'm talking about. If you are a casual investor, then I think that is something that you need to pay attention to, right? As part of your general investment philosophy, right? Of which, if you don't have one, then I urge you to quickly develop one, like right now, if you can, right? Before you even put your toes into this. So yeah, I mean, Lisa, I can only see you laughing, right? So I can't hear you. So if there's anything, something on my face, anything, just just wave really rapidly. Okay, now this is not financial advice. I think a lot has been said about that. I think at the beginning of this entire event, the organizers, Lisa herself, would have said this already. And I think it is even more true specifically for any market that is red hot, right? That is, in a state where of frenzy, right, and almost panic even, where FOMO is the story of the day, and people are just putting their money in anything that their favorite Twitter influencer or Facebook influencer or even YouTube influencer is shilling today, right? I think you need to be very practical about it. I think you need to, as the HO saying goes, DYOR, right? Do your own research and ensure that whatever you're doing makes a lot of sense. Again, with a larger look at how your investment philosophy generally is. Okay, so I'll say, I think enough about that. We go straight into why you're here for and what you're trying to understand with regard to investment in DeFi. Okay, so number one is DeFi is not new. DeFi is not new, right? Some would argue that Bitcoin was the first DeFi project. Some would argue that. It depends on which perspective and what you're saying, really, right? At the end of the day, everything crypto related looks at the secondary market, right? So in terms of finance, in terms of exchanges, DEXs, these are not new concepts, and these are all to a large extent, particularly when you layer on a model of governance, when you layer on a model of like nodes and the concept of decentralization, then it becomes DeFi, right? But this is not new. I think also we need to understand what spurred on that whole crazy fervor of like money coming into the system, right? Number one is the idea of Uniswap, of which I think by now all how many is this? All 57 of us, right? Probably have a Uniswap account, not an account, but we probably have interacted with Uniswap in some way or another, right? And Uniswap is not new, right? It's been there for months and months, right? But I think when we talk about DeFi and the whole craziness in terms of the secondary markets, you would actually refer to the last 2 months and 3 months in which billions of dollars have come in. I mean, Du has mentioned like at one point there was 1 billion locked up, and then in recent times 9 billion, right, have been staked or locked up in DeFi. So clearly 9x warrants some attention to that period of time. So what happened, right? Well, SushiSwap happened, YFI happened, Maker, right, certainly, right, has been an OG of sorts, right, in the system. But the money started pouring in, and investments start pouring in when you had new concepts of what you call yield farming, right? New concepts of how huge ROI or APYs, annual percentage yields, are generated through the staking and farming process. Not new concepts, just new ways of returns that got a lot of people really excited. Now, I want to point to the fact that you hear a lot of success stories, but sometimes you don't see the people who have lost money, right? And I think that is one thing you need to pay attention to. Look at everything from both sides, of the coin, and in order to judge whether it's something which you should get your feet wet into. Also, DeFi projects are huge universe of projects. When you say, look, which project is worth investing in, which project is worth dipping your toes in, what are we talking about? DeFi is so huge, so many angles. I mean, when you look at YEarn, right, .finance, that alone is a gateway to so many DeFi products and so many things, right? I know most of us are interested in the vault, right, because it gives returns, right? But there are risks, right, that you need to measure, and then there are returns, right, and you try and balance both sides of the coin. But my point is, there are so many different areas which you can invest in. When we talk about DeFi projects, there's YFI, obviously, Curve. Technically, even Uniswap could be a potential investment, right? If you talk about liquidity pools and just being one of the early ones, one of the bigger share of liquidity pool, that could potentially give you returns as well. Now, I won't cover in that. I know Georgie asked me what are you bullish about. Now, I won't cover in that with regard to what project specifically or or which would make you the most money, because that's not the intent. But rather to give you some parting thoughts on how you can actually look at these projects and define for yourself, right, which are good investment opportunities. So DeFi projects are greenfield technologies. Literally, they are bleeding edge, right? And the term bleeding edge literally means it can cut you both ways. It can cut you as well. Like, a lot of people lose money, right, in bleeding edge technologies, whether it's in pharmaceuticals, maybe even in edutech, prop tech. These are the new things that we're talking about. And certainly with DeFi, there's so many other risk exposure that we can go into. Now, I'll go now very briefly into these things. My favorite quote from Naval Ravikant, like recently, if you're not following Naval, I really urge you to follow Naval on Twitter. And really, he tweeted this, I think, just yesterday, and already is my favorite Twitter quote. He says, the next big wave in DeFi starts when Wall Street figures out that crypto has built a better casino, right? I think that's super interesting, and it's such a loaded statement, right? You can look at it from a surface, or you can really try and understand what he's trying to say. And really, when you look at DeFi, you need to understand where these parts are coming from, right? Unfortunately, with any bleeding edge technology, there are tons of scams. Not all of them are very apparent. I won't name names, but there are a lot of projects that initially came out as scams, right? And then became legit, right? Now, how does that even work, right? Because money poured in, the projects choose to stay, chose to develop, chose to carry out whatever they said they would do, right? So this is one of the things. Okay, so I have a few points on how you should actually look at projects, whether it's farms, whether it's outright buying of tokens, outright buying of coins, or maybe even if you are professional investors, like looking at into equity in some of these early stage companies, right? Number one, just avoid scams outright. Avoid scams outright, right? This may seem like it's really easy to do, but even the best, right, get bested sometimes with regard to some of these projects, right? Do your due diligence on teams as usual. The powerful thing about DeFi, which outweighs any other investment opportunities out there, is the fact that you can actually do your own research on code, right? Well, if you're not an expert in Solidity, if you don't know how to read the code, ask yourself, are there any audits being done, right? How are people actually looking at the code? Are they buggy? I think just hours ago, there was a news release that BZX just had an attacker mint like 8 million USD of tokens, draining a huge portion, I believe, of the link reserves, causing some issues. And this is something that a lot of people are interested in, right? BZX as a project, and yet that happened, right? So it can hit us anytime. We don't know with regard to DeFi. That's why it's largely experimental. I think when we talk about scams, we also say, look, avoid rug pulls, right? You might have heard these terms, where the initial person putting in liquidity pulls the rug. What happened famously in SushiSwap, right? Literally that happened. And then the price found parity, it went down to $1 briefly, and then back to $2 plus, and now it's just fluctuating about there. And of course, there's a fantastic event that's happening with the Chef Nomi, who is the creator of SushiSwap, one of the co-creators, actually returning the funds, right? It's a whole conspiracy. I won't even go there, but that is something you want to avoid, right? Avoid rug pulls. And then you ask, how do I avoid rug pulls, right? Well, there are innovative projects out there who are actually building technologies that prevent that by locking up liquidity through a specific period of time, unlocking liquidity over certain milestones or time, right? For example, LID or even TEAM, which are two projects. I'm not saying invest in them. I'm saying that they are actually providing such tools. When you look at the community, right, as with anything, look at community, and then also, well, sushi is a series of words because orchestrated scams. Yeah, well, I can agree, right? It depends on how you look, but we'll look at that later. Look at the community, look at how they are rating the project, how they're talking about the project. Of course, right, the wisdom of the crowd is not always correct, right? It's not always correct. And sometimes they say herd mentality is something you should avoid. True. But I think this is where you apply your own practical thinking as to how the crowd is reacting to the project. And if the crowd is certainly saying something bad, apply some common sense, right, into seeing what's happening. And if everyone is saying it's really good, step aside and say, okay, wait a moment, what if they're wrong, right? And then do your own research. As with any project in the DeFi space, look at liquidity, right? Be very clear how that is coming about, how that is happening. If there are investors coming in before that, big funds, VCs, that may not necessarily be a good thing, because ask yourself, who is selling, right, at the end of the day, and who bought at discount, who's going to sell on you, right? These are, I think, basic common sense that needs to be practiced, not said enough sometimes. Then the third thing, which may sound funny, it's utility. Why do I say it may sound funny? Because when you look at the DeFi space, a lot of times it looks like a circus, right? The tokens just go round and round and round and round, right? You borrow, collateralize, borrow, collateralize, borrow, collateralize. But really, sometimes you need to look at how is it actually working, right? In terms of utility, is it an AMM type of utility where you are actually earning a reward or incentive based on a market making strategy, or is it a downright Ponzi, right? Of which, of course, you want to avoid the latter, right? So that's one way to look at it. Then and speaking about Ponzi's, then you need to look at how sustainable are the returns. The problem with DeFi, which is also what sells it so strongly, is the fact that it's decentralized, right? And it allows anyone to create a contract at any point in time anonymously. Most of the projects which are done really well, fortunately or unfortunately, are anonymous, right? So you need to look at how this APY is created and whether it's sustainable or not, right? Last but not least, and something a lot of people don't talk about, timing. Are you early, right? Are you catching the wave? If you are a technical analyst, are you looking at how the token price is behaving over time for a proper project which does have a specific type of demand and supply, right? Are you looking at that? Okay, so I think my time is almost up. I'll just give some closing thoughts. When you are, despite everything I just said, right? Most of you may say, look, I know all these things. These are basic stuff. These are things that, DeFi has given us. Look at a code. Yeah, right, checked. So I'll give perhaps some more interesting nuggets. When you look at tokens, right, ask yourself, if you are buying a yield token, are you farming, right? If you're not farming, why not? Well, look at this way. If you are speculating on a yield token, that is an output token in which, a project like, let's say, SushiSwap does, right? Sushi is an output token, right? Yeah, you can say that, you put it back into the system, you stake liquidity, blah, blah, blah. But at the end of the day, it is a yield token that's generated from the system. If you're buying someone else's output, but you're not actually farming it, then you are denying yourself the opportunity of negating certain risks that come with it, right? The risks of impermanent loss, for example, in a liquidity pool, if you have no idea what impermanent loss, just Google it. There's tons of material out there. The risk of impermanent loss is negated through the returns, right? Through the returns. And a lot of these farms help you negate it further by stealing, right, or borrowing liquidity, depending on who you're asking, out of there to generate their own yield. Another thing that I will tell you is, from my observation, once liquidity actually goes, it never returns, right? And I think that this is something which is useful to pay attention to. So in many projects, people hold on to hope, right? They look at their token price, it goes down, and then liquidity is just being sucked out of the system. Less people are staking, and then we look at it and we say, okay, maybe we hold on, right? Sometimes myself, I'm guilty of a lot of these things in the bear market. We hold on to the token, hoping that it will eventually go up. But in the DeFi space, where we're looking at liquidity as a form of returns based on market making, based on interest, based on stuff like that, when it goes, it hardly ever comes back. Like, name me one successful case it came back, right? If you look at sushi, some people would say it never left, right? It never left. Like, it's still there. There's still tons of money being locked up, and it's true, right? But a lot of different projects, when the rug is pulled, right, or the liquidity has disappeared, it doesn't actually come back. So just understand where you want to cut your loss if you made the wrong decision, and then that will help you, I think, generally become a better investor, whether professionally or as a casual investor, like all of us, like enthusiasts. Yep. So that's what I have. Unfortunately, my volume hasn't returned.
Can you hear me, actually? Can you hear me now?
Not sure if that's a...
Can you hear me? You can't hear me?
Maybe, Lisa, maybe you can like type it in if you have any questions.
So if you...
Maybe I can just address what Avalon said, right? It's not really a question. Go to ask the question part. Okay, sorry. Whoa. Okay, I'm there now. Okay. So the first question, so am I right in reading like the question from the top to the bottom? So Georgie asked, right, is the missing link for DeFi adoption interoperability? Is that a question for me? Or no? Yes? Okay. I'm not sure this is a question for me, to be honest, because this is not really about investment or anything. But I can address this nonetheless. I think when we look at the space of DeFi adoption, one very interesting thing is the concept of oracles, right? And the concept of interoperability between platforms, right? Suddenly you have this whole host of different technologies, right, riding on the fact that they can actually hold hands and talk, and I think that that could be defined as a missing link. It depends what you're saying, right? The missing link to what exactly, right? When you say DeFi adoption, because in my opinion, DeFi adoption isn't here yet. I would define adoption as mass adoption, right? Meaning that either through the banking system or through the idea of like mainstream, mainstream, whether it's investors or users who are actually, using DeFi in a daily manner or in their activity and having that. But I agree that the concepts of interoperability really came about here. Why? Because there was money, right? It is always a very strong push factor, right, into how DeFi or how adoption works for that matter, right? So big money came in, hence a lot of blockchains are incentivized to say, look, let's talk to each other, let's figure this entire thing out together, right? And I think that exchanges have a very large part to play. Oh, is that a timeout?
No, I answer.
Or what? No? Okay.
Wait.
I can't actually hear. I'm not sure why. Okay. You answered that too? Okay.
Yeah, okay. So I think when we talk about DeFi adoption, like what JJ said, to what extent are we talking about DeFi adoption? Because DeFi adoption could be more people coming into DeFi, or it could be institutional players coming into DeFi, and that can be very different. So when we talk about institutional players coming into DeFi, one of the biggest risks in DeFi adoption is this regulatory risks. Because sure, there are a lot of people very interested in coming into DeFi, because if you look at all the different products or assets in the space, who is giving you returns? US treasuries are so low, corporate bonds are so low, the Fed is just buying all the bonds and just printing money like crazy. So traditional finance on its own, it's not giving you the yield. And where can you find place where the yield has been green for so long? One of the places, or one of the few places, is DeFi. But the thing is, there is no regulation to that, and a lot of people are very worried with that, and because money could just disappear. I talked about Rep BTC just now, where you take BTC, you change it to an ERC20 version of BTC, and you can use it in all the DeFi Lego stacks, right? But if the Rep BTC guys, they decide to just take the BTC and go, or the USDT guys, the Tether guys, decide to take USDT and go, that's it. There's no regulation to stop you. You can't call the police and ask the lawyers or SEC to check on that. So that's one thing, which is the missing link. The other one, so that's institutional side. We also have the retail side, which are people like you and me coming in to join DeFi. So I had a poll just now asking, do you have crypto? And some people have crypto, but there are also some that don't have crypto. They're just here to learn more. So the thing is, DeFi is not so easy. You have to learn finance, you have to learn technology, and to some extent, you have to understand economics. And these three are not easy subjects at all. So when you combine them together, the barrier to entry is quite high. Yes, there's a lot of information out there on newsletters, on YouTube, on Google, and that's a lot of information. But the thing is, DeFi is moving so quickly, so fast. So it's very difficult for people to catch up and very difficult for people to understand everything. because it's so complicated. And that's why this entire webinar is to educate you, to help you with the education, to help you to understand what are the missing loops, what are the specific information that you can go and figure out more about, and then you can start learning more about them and make your right research decision. Everyone says, do your own research, do your own research. Sure, do your own research. But where do I get started? It's so complicated. It's information everywhere. And then you have information that is, 101 level. And then you have information that's like 401 level. So it's a huge spectrum. And that's one of the aspects. Now, when we talk about DeFi adoption from a protocol level, so protocols speaking to each other, okay, that's where interoperability comes in. Because let's say my project is built on, I don't know, EOS or Tron or one of these other, or Polkadot or Cardano, and the other person's project is built on Ethereum. They are not really interoperable, and that's where the app and app can't really stick onto each other. So it's like one is a Lego, one is an authentic Lego set, and one is like a fake Lego set, and they can't link to each other. So this is where interoperability will come in when we're talking about protocol and protocol layer. Okay, so that's done. Let's move on to the next one.
Is it my turn?
Can you hear me? Can you hear? Oh, never mind. So, yeah, interoperability is very discussed, but it's still quite difficult. Okay, the next question.
Oh, okay. So it's my turn. Yeah. Again, sorry about that. For those who are joining late, I don't actually have volume for some reason when I turn on my mic and start talking. But okay, I think if projects can print money, right? That's the question. If projects can print money freely, how is the DeFi space any different from a corrupt government, right? I think there are a lot of similarities between how the DeFi space works and how the government actually print money. And I think when we talk about government, we are always referring to the Federal Reserve, right? Which is obviously printing a ton of cash today for the purpose of trying to overcome the United States struggling with the pandemic, but also no thanks to them pumping your Bitcoin, right? And pumping gold prices to all-time high, at least from a speculator's point of view. So when you look at DeFi, a lot of it happens in the same way, doesn't it? I mean, it comes down to how the founders first created the algo, right? Governing the monetary policy for the particular coin. So, I mean, if you look at coins like Ampleforth, right? Or even its evil twin brother, I think it's Ampleforth, right? XMP. They all have like very public type of rebasing money supply, which is very interesting, and a lot of people would like to say that the government can print money, but at least it doesn't take away money from your wallet, right? But Ampleforth actually does that, right, through the rebasing. So to some extent, it's worse, right, in terms of the monetary policy than let's say a corrupt government printing freely. But at the end of the day, that's not the question we're asking, right? The question we're asking is, you are comparing to a corrupt government, but a project letting the algo do the work, letting governance, between the community do the work. That's a different ball game altogether, right? You might even say that he didn't stand to gain. Like for example, Andreas, right? Creating Yearn. Right. The interesting part is he didn't even set aside YFI for himself, and that drew a lot of people into the space because there's 30,000 YFI, and then he has none for himself, so he's not intrinsically incentivized in that sense, or has a conflict of interest, so to speak, in token. Of course, it may not make you a fond investor because the guy isn't actually holding any, so to speak, but that is different from how a government works, right? A lot of times, the US government has been criticized for printing money and then keeping most of it, right? Like, I mean, they gave a handout of 1,200 to every US citizen, but how much of it really streamed down to the people who actually need it, right? I think that's really what we're addressing. So to cut a long story short, I think it's different in that it is open and transparent in terms of how the algo works. Every investor, every holder can see what's going on or what's going to happen in the next rebasing timeline. You're not reliant on some decision that you don't have a part in or you have no visibility over. I think that's the key difference. Lisa, am I tackling the next question, which is the fund? Okay. So funds usually invest across 5 to 10 years. How do I evaluate DeFi projects if the same tokens can fall to zero in a day? This is a very good question. And this is also what has gotten a lot of VCs scratching their heads over the mandate, right? And over what they can or cannot do. Which is why, when I started to introduce our CRC Capital at the start, I also mentioned that we are very experimental. Experimental in what sense? Experimental in the sense that even for our mandate, even for the way we make decisions, that has changed like drastically over how a PE fund or a hedge fund would operate. I won't go into detail exactly how we make those decisions or change those decisions, but I'll just say that to a large extent, it allows us a huge range in which we can change direction or even change the way we evaluate projects or even the timing, right? You always hear about VCs. For those of you who have raised funds, VCs could take 6 months to a year evaluating a project. But a lot of times for us, like we have to evaluate in a week, and then we have to put in money the next day, right? So that typically is different. So to answer your question is, we evaluate projects. We have our quick mandate. A lot of it, we have already done a few. We have spoken to a couple of other funds who have done a few, and then we adopt, right? And when we come across it, we have to make the step quickly. It's a yes or no quickly. And as we get into projects, nobody has 5 to 10 years. We make a quick decision before we enter, and I urge all of you to do this if you're a casual investor. We make a decision. What is our target, right? Where are we going to make our returns? Where are we going to cut our losses, if any? And then we go from there, right? And we make sure that we follow the mandate strictly, right? Because this is a law of numbers here, right? We make sure that we spread it out across different projects. So that's another thing we do, so that we can actually benefit from that, right? Spreading our eggs across a lot of baskets, so to speak. Yeah. Is there any other questions for me, Lisa, that I should be tackling? The next one? Okay. So would that be IE DeFi's for a project like Ampleforth? How do you imagine the founder vision of the world to be? I think when you read a project like Ampleforth and you read their white paper, right? The last I read this white paper was, I think, 2 months ago, maybe, back around the time when they launched. So I can't remember word for word, so bear with me here. But when I read it, I saw the way they wanted to change the way the Federal Reserve work, and they wanted to build a better currency. So I think clearly it's from a disgruntled individual or founder who is like, look, I'm sick and tired of how opaque the Federal Reserve or other institutions are in terms of how they manage their policies. I'm going to do it better with code. Whether or not he has accomplished it is anyone's guess. As an investor, you just want to make money. If Ampleforth is not at your correct exit strategy, you probably say the project has failed, right? But not necessarily. And I think that's the overarching context, right? How you judge a DeFi project as being successful or not may not be hand in hand with your goals, right? In terms of whether you make money back from this project or not. Yeah. And a lot of times, when you look at the dot-com boom and the bust in year 2000 or so, a lot of the projects that so-called busted but hung on became, right, the FANGs that you know of today, right? The Amazons, and all that you know of today. So, it's all about timing. It's all about, are we early? Are we too early? These are according to questions, and none of which I can review right now, right? Only time will tell. So next one, right? Okay. So what's the end goal? The individual ones from this. No, not that one. Which one? Down. Let me see. Is it the U tokens have no intrinsic value? That one? Okay. let me read this real quick. I haven't seen it. U tokens have no intrinsic value, yet exchanges like Binance are rushing this now. Is that telling us the ecosystem players in our space care more about making money than innovations? Look, everybody in the space, everybody in any job, anywhere wants to make money. Let's not be too quick to judge to that, right? I think a large part of capitalism, a large part of how we have built out companies, in the last decade or decades or so, has always been, right, with the golden rule that it needs to be a real business, it needs to make money. People need to pay attention to their P&Ls. In fact, a lot of projects would have done better if they pay attention to their P&Ls, arguably. So I won't say that making money is bad for these particular exchanges, because that's their business. But your question really is about comparing that to innovation in this space. And I think it may be unfair to put the idea of an exchange supporting innovation on the fact that they are listing tokens with no intrinsic value, because first they have to serve customers. And what do customers want from exchanges? Very straightforward. They just want to trade. They're not looking to be in the next technology or to support so-and-so individual, right? They are there to trade. And it is in the business of the exchange to list tokens, right? And certainly in the business of exchanges to list tokens that people are interested in. But it is their duty to prevent scams, to make sure that they do appropriate due diligence. If your question is that, for example, Sushi having undergone that rug pull, right, that actually reduced their price by what must be at least 50 or 60% in one downward candle, right?
Yep.
If your idea is that could be interpreted as a scam, then certainly, you could actually pin it down to these exchanges not having done enough due diligence on SushiSwap, or certainly should they be listing a token with an anonymous founder, right? This could be caught into doubt, which it actually has. And that's a separate debate that is now ongoing in the space, of which I haven't taken a side. I'm not sure I would take a side, because I do not know enough about the listing process of these exchanges with regard to these tokens. Okay.
And then
the next one? Yeah.
So,
for you? Okay, yes.
Yeah. So to add on to whatever Jeremy has said, what I would add on is that if you look in the real world, there are a lot of things that are also listed on exchanges with no intrinsic value. And that exists. If you look at SPAC, it's a type of firm that has zero assets, but they're listed on exchanges. There are a lot of entrepreneurs and these kind of fund founders. They're over there that list SPACs, and then they will go ahead and acquire some companies. So things like this also exist in the real world. So you can imagine that as we move from the real world to a digital world, we're going to kind of take some inefficiencies along with us. Then the market will decide if we approve of this or not, because time will tell. Market in the long run is always right. And if these projects don't exist in the long run, then we know that the market is not supporting them, and then they will just diminish from our existence. So right now, I would say that DeFi is a big playing field. A lot of people are still playing and figuring out how all of these things work and see what works and what doesn't. Okay, so let's go to the last question. Jeremy?
Me?
Yeah, the last question.
I can't tell. Are you asking me to talk about this, Lisa?
Yes.
Yes? Okay. This question, right? That one you just answered. So I completely didn't hear your answer. So I apologize for that. Again, I have a technical issue with the volume. But look, at the end of the day, understanding how, I can even go further and expand on this question and say, look, it's not just as simple as that, right? There's just so many.
No. The last question on farming. I
think you have to type it out.
Yeah, it's there.
Oh, farms giving interest rate representation token
No.
allowed.
No. All the way down.
That's all I see, though. All I see.
Interest rate. Oh, yeah. Correct. Sorry.
I'm good?
So, yes. Farms giving
I'm
interest
good
rate.
as in, do I answer that question?
Yes.
Okay, I answered that question. Okay, so is that how a Ponzi looks like? Like I said, I can expand on this even further and say that there are even, farms who are taking on tokens from farms, right? And then generating a yield, and then another farm taking yield token. Is this how a Ponzi looks like? Possibly, yeah, right? And again, that is something you need to be cognizant to, because a lot of times you are not the regulatory bodies aren't catching up quick enough and looking into this, and they're not certainly going to be someone you might have recourse to, right, in the event that you do inevitably invest in a Ponzi which explodes or implodes, right? So again, apply a lot of pragmatism, apply a lot of rational, a lot of common sense to how you're investing. If you do look at a system like that and say, look, this is a Ponzi, I'm interpreting it this way, then of course don't invest, right? I mean, you never know timing and how it works, and also depends on your risk profile. I think the idea that a system requires a lot more capital coming in order to boost the price or boost the system can always be interpreted as a Ponzi, right? But I would sometimes argue that the same could be said of stocks, right? Like when we talk about book value, like EBITDA book value, 1x of the PE, that makes sense. But 50x of a PE, what is that, right? That's just more money coming in to buy, right? The greater fool theory. But again, let's not label things, right? The